The uranium market is very interesting from a fundamental point of view for investors. In this video, we want to take a look at a few of those aspects, but then we also want to take a look at how our technical analysis, our Elliott Wave analysis, supports that. So we'll take a look at long-term targets for two assets within the uranium sector. Let's go. Hello and welcome to another video by MCO. My name is Ben and today we want to take a look at an article I've wrote myself and provided to our community a few weeks ago regarding the uranium sector. So there are a few fundamental aspects why I personally find the uranium sector from an investment point of view quite interesting. In addition to that, there are two assets that we want to take a look at from an Elliott Wave point of view, which is the URA ETF. So we'll take a look at that. And then UEC, which is Uranium Energy, one very, very popular stock in that sector. So we'll take a look at short-term updates or short-term outlooks from an Elliott Wave point of view, as well as the long-term outlook. But before we start with the technical analysis, let's take a look at a few of the fundamental aspects. So if you might not know it, we do provide updates for Elliott Wave structure or about Elliott Wave structures for certain asset classes in a community. So we have a stock service, we have a cryptocurrency service, and in our stock service, I provided an update about uranium. Just sort of my thoughts from a fundamental point of view. I just want to share a few things why this is something worth looking at least, and then we'll take a look at how the Elliott Wave counts support that from a technical point of view. I myself, I'm more interested generally when it comes to trading in the Elliott Wave counts, but when I'm investing in something, then I'm also considering the fundamental aspects. I need to know about the fundamental aspects, whether I'm interested in a sector or not. Now, I just want to briefly read a few aspects here to you, read out loud, and then we'll take a look at the charts. So the uranium sector has been a topic of growing interest, particularly as the world seeks cleaner and more sustainable energy sources to meet rising electricity demands. So I shared my personal thoughts, and there is a changing sentiment towards nuclear energy. In recent years, the perception of nuclear energy has undergone a significant shift, fueled by advancements in safety and its low carbon credentials. Now that's one point. I'm not going to read everything out to you here, but there have been a lot of misconceptions about nuclear waste. I don't want to go into too much detail here, but basically there have been a lot of advances in nuclear waste management and reactor safety. Fundamentals are driving demand. You might not know this, but the rapid growth of artificial intelligence technologies has dramatically increased global electricity demand. I mean, there is a lot of demand for electricity worldwide, and especially AI uses up a lot of energy. AI-powered data centers consume far more energy than traditional centers, compelling tech companies to seek cleaner energy sources to maintain low carbon footprints. So, and then obviously, as coal and oil face mounting criticism for their environmental impacts, nuclear power offers a practical alternative. Maybe one more aspect here, the link between nuclear energy and uranium. As nuclear energy demand rises, which it does, so does the need for uranium, a critical component in reactor fuel. Uranium mining is concentrated in a few key players, just that you get an understanding of the market. And you're welcome to look this up or research yourself. I definitely encourage you, if you're interested in that market or if you're investing in that market, do a deep dive fundamental analysis. It's really interesting. So uranium mining is concentrated in a few key players, and long-term supply contracts dominate the industry. This dynamic creates opportunities for investors seeking exposure to this vital resource. However, investing directly in uranium mining stocks carries risks related to geopolitical and regulatory uncertainties. So you can mitigate that risk through ETFs. And one of them is the URA, which is the Global X Uranium ETF, which we're going to take a look at today. What you might not know is that ETF offers a dividend yield of 2.86%, at least at the time when I was writing that article. providing investors with a steady income stream alongside capital gains potential. So that's interesting, but we also take a look at a stock. So I would say let's take a look at the URA ETF. And I'm tracking this as a bullish Elliott Wave Structure. We start the wave count in 2020. I can see a very, very clear 5-wave move to the upside from the 2020 low. You see wave 1, 2, 3, 4, 5. So I've got 5 waves up. When there is a 5-wave move to the upside, that typically indicates, okay, from an Elliott Wave point of view, that rally is potentially done. Let's see if we can get a correction. And typically a 5-wave move is followed by a 3-wave pullback. So let's see. Yep, as you can see, there is a 3-wave move down. And from an Elliott Wave point of view, this is a wave 1 and a wave 2 in an even larger 5-wave pattern. Now, it is not as easy as that. Yeah, if it was that easy, we would say it's going to go up guaranteed. It's not guaranteed. There is always an alternative. If certain key levels break now, key invalidation points, and we get these invalidation points from Elliott Wave, from the rules and guidelines that we are using and that we developed over the years. Well, if they break these key levels, then wave 2 is still unfolding. That would be a fallback scenario, plan B. And this chart is so interesting because we are very close to that invalidation point. Now you might say, okay, if we're very close to an invalidation point, isn't that weak? It does show some short-term weakness, absolutely, but think about it from an investor point of view, trader point of view. When we're close to an invalidation point, you know where to set your stop loss, which would typically be below the invalidation point. That means you have a really good reward to risk ratio. So the price could go up quite aggressively from here. And if it doesn't, well, it doesn't hurt much because you can easily stop out. You're very close to a stop, yeah? But the potential is far greater. So we'll take a look at that right now. So if we say a wave 2 bottomed in 2022 at around $17.50, then we're now likely in a larger degree third wave. Let's just for fun calculate potential targets for that larger degree third wave, which by the way is a long-term outlook. Yeah, I can't tell you how long that is going to take, but it will be long-term, years. Yeah, think about it like that. I mean, this wave 1, we have a wave 1 and a wave 2. And then in this third wave, we have another 5-wave move. I'm not going to go into the Elliott Wave rules and guidelines here, but this wave 1 took a couple of years. So it will take years until all 5 waves are completed. And so we had another higher low in wave 2 of 3. And we could be in the process of starting wave 3 of 3. So this is interesting because the third wave is typically the most aggressive trend in a cycle. And we know that a larger degree third wave like this should reach the 123.6 extension Fibonacci targets, and that's at $115. So really good reward to risk ratio, because if we consider now where the invalidation point is, we can set, we're basically, let's say we get stopped out because we set a stop below the red line, the last swing low, which is here at around $22.70. Yeah, we lose a few dollars, but we could potentially gain 100. Okay, from a reward to risk point of view. Now this is based on the speculative assumption that this is a 1-2, 1-2, 1-2 setup, which is very bullish. The price breaks out from here. It is a third wave of a third wave of a third wave that will happen, that should happen, which is very, very aggressively bullish. Now, okay, it's not as easy as that, because if we break below the red line, I would say, okay, I would want to see then what the price does. I would take a step back, let the market do its thing. I would not be bearish. It could even make sense from a long-term point of view to still accumulate, get those dividends. But it is then becoming more likely that either this wave 2 is still unfolding, that presumably bottomed in August 2024, or even the larger degree wave 2, which could potentially send the price down into long-term support. Let's define long-term support here. Below this chart, I have no long-term bullish outlook. That's the thing. So at the moment, I am bullish, even long-term, even if short-term bearish, even if support levels break, I would become short-term bearish, or at least would take a step back and say, okay, there's a lot of uncertainty that's coming in now because the directly bullish thesis is becoming less likely. I would still be long-term bullish, but below $9.61, I wouldn't be. Honestly, long-term reward to risk ratio still great, even if we test $9.61. Even in the yellow scenario where we're still in the larger degree wave 2, this is still, I mean, you are losing $15 essentially if you set the stop below that. Even if you set the stop below the $7 level, which is the March 2020 low, from a long-term point of view, you're risking, what is it, a little bit less than $20, but you could potentially still get 100 if we say the third wave could take us to $125. That's why I find this so interesting. Not only for traders who might find an interesting short-term setup here for this 1-2 setup, which again is a bit speculative because we haven't seen any confirmed low. And to be honest, this rally looks like a 3-wave move, so I'm not convinced by it. I find orange quite likely, which would be a larger wave 2. Okay, but still, this is something to point out because it's a low risk, high reward setup. Okay, so long term, very attractive, fundamentally and from a technical point of view. Short term, decent setup, valid, bit questionable. But as I said, because this rally looks like 3 waves, it should ideally be 5. So, but it's an opportunity that is there that I think you should know about. But I find the probability of a break of support quite high. That would then open the door to a test of the $9.61 to $14.84 area. However, in orange wave 2, there might be another support area in between. Yeah. So the invalidation point for the orange scenario, which is a larger 1-2 like this, invalidation point is the $17.60 level. I mean, this would be what I would watch this one next, okay? But I would want to see a reaction then before the price invalidates this setup. And the support for here, I mean, we normally don't want the price to break below the 78.6 retracement, okay? So the relevant level will then become $20.30. Below that level, yellow will become more likely, but yellow will not be confirmed until we break below $17.60. Now let's take a look at uranium energy because it is a stock. A little bit more action here potentially, yeah, quite a sharp move down at the moment, and it might give us a bit more clarity short term. Now also here on this chart, you can see that target-wise, when price is now around $5.50 while I record this video, target-wise, $20, $23, sort of, I would say even medium term, long term, we also talk about potentially $50 to $100. That's too far away. I mean, it doesn't make sense to trade for that, okay? But also here we have a bullish structure where a larger degree wave 2 bottomed in March 2020, another 1-2 setup, another 1-2 setup, and maybe even now, another 1-2 setup, which is getting tested right now. Okay, so we have the nearest support area I can offer for this 1-2 setup is between $4.80 and $5.97. Below $4.80, it becomes more probable, like on the other chart, that this wave 2 that presumably bottomed in September 24 is still unfolding. Then support shifts to $3.08. Yeah, in a wider wave 2. But for now, I'm watching if the market can generate support or find support in this upper support area here, which is defined between $5.97 and $4.80. The way the price is coming down into this support area suggests that we could be still in an internal third wave down. To explain how that works, such a correction, a wave 2, is an ABC structure. It's a 3-wave move. And the C wave, in which we currently are moving, is a 5-wave move. So it might need another corrective bounce, a lower high, and one more lower low. So there is a realistic chance we're going to test $4.80. That's what I'm saying. However, if we break above resistance, and if the price goes above $6.19, which is more than such a wave 4 corrective bounce should do, we have the first indication that a low is already in. At the moment, the price is testing micro support here at $5.31, but it looks as if it needs one more low. So the bottom line is we have two assets here which from a long-term point of view are very attractive. Short-term as well, but short-term on both of them, there is no confirmed low. So this is technically still a catching the falling knife situation. Be careful if you buy here, because if certain invalidation levels break, we are automatically moving into the larger pattern, which is still bullish, but allows for more downside. the risk levels change, support is moving away then, as I showed you, it's important to watch for a reaction on both charts, I think. Depends on how you play this. I can only share with you how the charts look like. I can't tell you how to trade this. I'm definitely interested in the URA ETF, also from a dividend point of view. I want to observe this for a few more days to see if the market does react. If it goes any further, then I might hold off buying, see how it reacts to this support area between $20.29 and $22.60. If it doesn't react there, I will probably give it space all the way down to $9.60. Yeah. If we, however, in the coming days, over the coming sessions, see an aggressive move up from here, I might put a stop below the last low, open a long trade, and see how it plays out. There is structural resistance probably in this area around $33. Will probably split my portfolio into short-term position and a long-term position, which I will use just for long-term, because I find this sector very interesting, and the long-term patterns look really, really attractive. But at the same time, there is a lot of room for downside, which I would not accept in my short-term trades. But from a long-term point of view, I don't care. I would just accumulate further, knowing that below 961 it's going to get very critical. But you can manage that risk with sound position size management, where you understand the long-term reward is quite high. So hopefully that makes sense. Let me know if you like the update about uranium. Let me know what you think about these assets. I find them quite interesting setups without confirmed lows at this stage. But if they play out, the third wave should really play out nicely. Sometimes, and quite often actually, those setups need several attempts before we see a rally. So there might be, a rally out of the support area, another test, another rally. That is something that is then interesting for range traders, but truly trend traders want to be in there for the third wave. So yeah, that's the update about uranium. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you are interested in additional updates, make sure that you also activate the notification bell. Let me know in the comments which other stocks or cryptocurrencies you want me to cover. Thank you very much. Bye-bye.